Okay, I want to thank everybody for tuning into this conversation with Grant Williams. We normally, just do this for the Microcap Club community, these live conversations, but I thought I'd open it up a little bit to a few more others. So there might be a few more others on here live, and appreciate you for being here. We started doing these conversations about 2 months ago. Did our first one with Tony Deaton, who Grant Williams knows very well, and we did one with a friend of mine, Jason Hirschman, and we have one with Grant. We have one coming up with Honam, who's going to be a really interesting person to speak to as well. So, again, thank everybody for coming on. As a reminder, if you're listening to this live, you can ask questions by clicking the Q&A button at the bottom of the Zoom screen. Enter your questions there. We'll try to get to them during or after the conversation we have today. And of course, a quick disclaimer, which I love to read, but I'll do it. The purpose of this conversation is for informational, educational purposes only and should not be construed as a recommendation to purchase or sell any security. Microcap Club is not a registered investment advisor. Microcap Club, its partners, members, subscribers, affiliates may or may not hold positions in one or more of the securities mentioned in the program and may trade in such securities at any time. Do your own due diligence and seek counsel, and don't listen to anything that Grant and I have to say.
Pretty comprehensive.
Grant, thanks for joining us today. I've been looking forward to this conversation for a long time. Thank you.
That's great to see you. Thanks for having me. I appreciate it.
There's a bunch of areas we can go with this. I mean, you're a fantastic writer, an interviewer, speaker, reader. You're obviously just an all-around curious human being. And, I thought that a good place to start would be writing. I know, for me, when it comes to my writing, it's kind of where everything originates from. You're reading something, you write about it, you journal about it, and that just starts everything else. And whether it's your writing, your speaking, your interviews that you do. And I'm just curious to learn more about kind of your writing habits, when they've formed, if you have any, what it normally looks like, your typical day when it comes to that, since probably a lot of what you talk about originates from what you write.
Yeah, what a great question. I think I've never asked that question before. Funnily enough, I've never been a writer per se. I've never been someone who journaled. Never been someone that would ever have considered myself as the kind of material that would end up being a writer. And I'm a reader. I've always been a reader, and I've always been a voracious reader. And I love to read, and I love to learn. And the writing. It really started back in 2009, quite accidentally. I just found myself in a new role, and for that I had to take on. I'd been a trader for 30 odd years, and suddenly I wasn't a trader anymore. I was in a sales trading role, which I'd never done before, and so part of that was communicating ideas and communicating what I thought was going on in the world with people on a daily basis. And so, I'd always done that from the trading desk, and I'd always spoken to clients directly from the trading desk before, but I'd never had to, it was always over the phone. I never had to put out a morning note or put out anything like that. And so, as I looked at the challenge of what I had to do, I kind of boiled it down to one really critical desire, and that was not to waste anybody's time, because I realized that there were a lot of people who would be sending stuff to people to read throughout the trading day. There'd be an awful lot of notes coming through and updates and this and that. And so I did a survey of the people I was going to talk to, and that brought out what I thought. There were, people were getting like 30 odd morning rundowns and 30 odd afternoon wrap ups and all this kind of stuff from different brokers and different salesmen everywhere around the market. And so I thought, how can I not just add to that noise? How can I create something that is worth reading and doesn't just regurgitate what other people are saying? And so at the time, the financial internet was really kind of nascent. There were a few people out there writing regularly about finance, but there were a lot of kind of alt sites out there, and there was a very small core of places that everybody seemed to go to get their financial information. And I've been reading all kinds of things for a long time just to get a bigger, more broader perspective about what was going on. And some of it was kind of wacky. And this was the early days of Zero Hedge, when it was a very different site to what it's become. But there are a bunch of alternative finance sites where people were just blogging and talking about their little corners of the financial markets from an insider's perspective. And I found that stuff really interesting. So what I tried to do was create something that every day would be talking about completely different ideas and completely different stories than they would have read on Bloomberg or seen in the FT or been bombarded with by other salespeople. And I found that fascinating. And to sit and write about what I'd read and what I'd learned just came very naturally to me because I was genuinely curious about it. And I wanted to share these ideas. And so that was my start in writing. I would do it every morning, you know, it got a lot of traction pretty quickly, and I think purely because it was a little different, and it wasn't what these guys were used to reading, and that, you know, through a series of all kinds of bizarre twists and turns, turned into a writing career of sorts, you know, and the frequency changed, and the frequency of my publications changed, and the length of what I used to write changed, and the kind of the way I used to do them changed, and it's been a fascinating journey, but something I would never have, you know, before I started it. If you'd said to me, you know, you're going to be a writer in 5 years, I would have laughed at you because I had no background in that whatsoever.
Well, and just so everybody knows, I mean, you can find Grant Williams content on www.grant hyphen or dash, depending on the type of world you are, grantwilliams.com. And you can find his, not only his newsletter, but all the content that he produces, whether it's speaking, interviews, podcasts on there. And, you know, one of the things that Grant didn't mention is, you know, he usually puts up on like a monthly cadence with, you know, his newsletter. And what's impressive is this isn't a 6.5 page newsletter. They're usually, you know, 40, 45
Yeah,
pages. They're rather robust. So to see that type of high quality, but also quantity of content, you know, pumped out on a monthly basis at a high quality level is pretty impressive.
oh, that's
Um,
very kind. Thank you.
I I feel maybe switching over to investing, you know, I feel like the type of investor you become is greatly influenced by the first trades or the first investments you make, you know, early on in your career. And kind of the way you view risk is greatly determined by whether those first few trades or investments went well or poorly. You know, if you make money early on in an endeavor, you're more apt to double down on that area. And that might become your flavor of investing for life, right? And if you lose money in an area, you might move on to something else because you lost money once or twice. And, you know, that's not for you and your personality or temperament. And, you know, I'm just curious looking back, you know, at the formative investments kind of in your experience, you know, early on in your career, you know, can you point to anything in those first few kind of experiences on the investing or trading side on the exchange desk that kind of pointed you in the direction you're at today?
Oh, so many. I mean, so many. It's a constantly evolving process, as you well know, you know, and I try to change and adapt and incorporate new ideas all the time. But I had a very interesting beginning because I wasn't an investor. I was very much a trader. I wasn't thinking long term. You know, I was a young kid and I was thrust into this crazy Japanese bull market in the mid 80s. You know, I caught the last kind of 5 years of that raging bull market, and it's, you know, we've had a glimpse of it today with the Magnificent Seven and some of the stuff that been going on in AI and Nvidia and some of these stocks. But this was a whole market. This was an entire country stock market which was just on fire, and because it wasn't the US, it was an unusual investment destination. There was a lot of money trying to get into Japan that didn't really know what it wanted to do. It just wanted to be in Japan because that was the hot country. And, you know, the Japanese economic miracle at the time was impossible to disavow. It was a genuine thing. So um, I'm there with very little experience and probably even less understanding of what the hell I was doing in a market that was just going up every day and going up aggressively every day. So my grounding was that markets just go up every day, and you don't have to be smart. You just have to be long. And, you know, you whatever you do at the end of the day, don't let somebody take you short of something. And every few weeks you can have a, you know, reasonably bad day, but it'll be way less bad than the good days are good, and rinse repeat. It was great. Um, and so that was the kind of bedrock of what I was learning. And this was 1986. I got my first trading book. Uh, and those lessons were reinforced every day, every day, every day until Black Monday, until October the 19th, 1987, when the world collapsed overnight. And for someone whose understanding was that things just go up, and they keep going up. And every now and again, they go down a little bit and then they start going up again. This shook me to my absolute core. I mean, it absolutely informed a lot of which has come since in how I think about the world. And that is this idea that at any given time, it can all be taken away from you. And to see a market get cut by 25% in a day, you will never see that again because circuit breakers and everything's been designed to stop that happening again. So we'll never see it again. Um, and so having that completely upend your world and make you understand that everything you thought you knew was completely wrong. And markets don't just go up and they don't go down once in a while and nothing happens. Made me completely reevaluate how I looked at things. And I didn't ever want to be in that position. I mean, I was fortunate. I was surrounded by some phenomenal traders and, all more experienced than me. And I remember that day, the panic I felt coming in to work in the morning, because obviously New York had crashed the night before I was in the UK. The panic that I had going in, but to be around people who were experienced, and even though this was a shock to them as well, they just had that little bit more understanding of how the world can work than I did. And so to be in that period where everybody just got super focused and they just dealt with what was in front of them. There wasn't any existential angst about the future. It's okay, this is a bad day. We need to manage this as best we can. And, there were a lot of smart decisions getting made. And I just kind of followed along. I really didn't know what I was doing. I was a deer in headlights. But it really did, as I say, inform in my mind this idea that this can happen. Not that it always will, but it can. And that to me became the thing to avoid. How do you avoid losing a quarter of your capital in a day, losing 50% of your capital in a week? How do you avoid these massive drawdowns that no matter how many days the market goes up, if you experience this, getting back to where you were afterwards is not only difficult from a market perspective, but mentally, it's really hard to recover when you have these big, big drawdowns. And, and I absolutely acknowledge that. Did that make me gun shy in the 90s? Absolutely it did. Going into I was in New York for the peak of the Nasdaq bubble. Did it make me gun shy for that? Absolutely. Did it make me gun shy over the last couple of years? We've seen these crazy Mag 7 runs. Absolutely, it did. Did it help me avoid 2008? You bet it did. Did it help me avoid 2000? You bet it did. Did it help me avoid 2020? Not as much because it was so sudden, the COVID thing, but I reacted to it potentially a lot quicker than other people did because my mind was programmed to watch out for these events. So, you can't have it all ways. You're either gung ho with no fear and you ride the momentum and you chase things up and you make massive outside gains, and you are, a hostage to fortune every step along the way, or you have it the other way and you're aware of this and it definitely tempers your naked ambition and naked greed for these big gains. But for me, that just fits my personality much, much better. I think everybody, I've been talking about a presentation I put together this year called "Who Are You," which is all about being an investor versus a speculator. And I think, I was trying to explain to people that the very first thing you have to do is understand who you are. Forget the market. Who are you? What are you trying to achieve? What's your risk tolerance? What's your mindset? And without really understanding that, without really having a solid sense of who you are and what you're trying to achieve and how you're prepared to do that, it's very easy to get swept up in the wrong kind of trades, the wrong kind of emotions, and not really have a grounding in terms of, okay, I can see this is going on and it's very enticing and I see why people are getting sucked into it, but it doesn't fit with my core. And you mentioned your conversation with Tony Dean, which I thought was terrific, by the way, as every conversation with Tony is. But the hours and hours I've spent talking to Tony over the years have given me such an incredible understanding of a lot of the things that I felt but couldn't really put into words. A lot of the things that were very emotional triggers for me. I didn't really understand where they came from. But Tony has helped me understand those in a much more explicable way, in ways that help me perhaps explain them to other people. Because as you know better than anybody, Ian, he just has a way of talking about the principles underneath what it is we're all trying to do here, which just resonates so strongly in terms of building something that has resiliency and has permanence in a world that is very temporal in so many ways.
Hmm. Yeah, and I think to your point, I think it takes a solid 1 or 2 decades to kind of figure out your temperament and what type of flavor of investor or trader you actually are,
Yeah,
you know. And it's I
yeah,
think the beginning years, I mean, my start was kind of similar to yours, where I got lucky riding the technology bubble in the first 3 or 4 years, and then had a 85% drawdown, and then I got lucky again, and it was kind of one of these. It took a solid 10 or 15 years before I kind of realized where I needed to be, and I think to a lot of point when it comes to risk and riding waves. It's like you're sort of like going to a casino and you go to the roulette wheel and you see that red is streaking, and you either bet red or you're the type of person that's going to bet black, right? And
so true,
I think
so
over
true.
time you start to be more the person betting against or betting black because you know eventually it'll end.
Yeah.
And I feel like that's a big part of kind of the maturation process as well. But
Yeah, I remember very clearly talking. I interviewed Kyle Bass probably a decade ago now, I would think, close to a decade ago, and we were talking about his start in the industry. And I asked him, I said, what's the worst thing that you ever had to deal with? Um, and he said, the worst thing I had to deal with was the first stock I ever shorted went to zero. He said that was the worst thing that could have happened to me. He said because I just thought, wow, this is so easy. If you find a bad stock, you short it, it goes to zero, you square it off and move on. He said, and it gave me so much false confidence and so much false belief in how the world worked. He said, and the next, three or four all went horribly wrong. Cost me way more than I'd made on the original one, and made me completely question everything and go back to the beginning and think it all through. It was an expensive lesson for him. But he said, if that first one had gone wrong, I'm sure I would have had a very different mindset. And so, we're all the product of our experiences. And I think, even in the middle of horrific experiences, both markets and personally, you have to try and find a way to be still and just think to yourself, okay, what can I learn from this? As bad as it seems right now, there are lessons to be learned here. And I've had those in the markets, I've had those in my personal life, and I've always tried in the moment to just take a breath and say, okay, I'm being taught something here, and it might not be obvious what it is, but let me try and figure out, put the emotion aside, put the pain aside, put the success aside, whatever it may be, what's the lesson here? And I think if you have that mindset that there are lessons in everything, and the most valuable ones I think come from failure, but there are also lessons that come from success, and certainly in taking the time to drill down and work out why you are successful, because oftentimes you can get the right outcome for completely the wrong reasons. And it's important to understand that sometimes success is just luck. And was that luck something that you could have actually tweaked your process to get the same outcome, but with less risk, perhaps, or with less reliance upon luck? What can I have done differently that maybe would have captured the same outcome, but without so much reliance upon good fortune? So there's always, every day
mhm.
is a chance to learn something, good or bad, and having that mindset has anyway for me has been an incredibly powerful tool.
When you were trading those 20 years, I think from like the early mid 80s or late 80s to, up to 2008-ish, you're going through that process. And were you just becoming more kind of against the trend type of trader? Is that how that kind of manifested itself in your trading style through those 2 decades?
Yeah, I think invariably as you get older, you tend to get more skeptical. Um, I think that's a natural evolution for most of us, and it actually becomes something of a battle to not get too skeptical, because it's easy to do, and you kind of time and experience tends to jade you towards a lot of things. And I have great admiration for the people who can have tenure in this industry and still be wide-eyed optimists about everything. I think that's actually much harder to stay in that place if you have a curious mind and you really want to understand how things works. I think it's really difficult to stay wildly optimistic, um, unless it's a Machiavellian thing and you understand, though you might be skeptical, being optimistic is the way to make money, you found, and so you force yourself to do that. Different people handle it different ways. But I definitely think I've become more skeptical over the years, and I definitely think as you go through your career and you build assets of whatever kind, whether they're actually financial assets or emotional assets, whatever they may be, as you build this life around yourself, um, the problem does become not letting it get away from you. The problem isn't how do I go out and make more money? The problem is, wow, I've worked hard. How do I make sure that my future, my family's future is secure? How do I go about changing the way I look at the world to make sure that the big problem I face, which is having my capital taken away from me, doesn't happen? And I think that requires a certain amount of skepticism. I think it requires a certain amount of willingness to suspend belief and to just not take everything on faith. And that can be difficult to do because it does accelerate this process of becoming jaded because you feel like it's something you need to do. It's an exercise you need to put yourself through. When you look at everything as a 20-year-old in the industry, it's like, how much could I make out of this? How good could this possibly be? And one day you wake up and you realize that the first question you ask yourself is, how could this hurt me? How could this go wrong? But I think it's necessary. When you're young, you have time. If something does hurt you, something does go wrong, you have the time to recover from that, and you have the time to get back to where you were before with that lesson learned, and with a more complete outlook about how to think about these things. But the older you get, the tougher that becomes. And so, I definitely feel that I'm much more in the okay, but prove it mindset now. It's like I get the idea, and this is one of the things with which I always get sucked into talking about is Bitcoin, and Bitcoin is a perfect example to me. I absolutely understand the case for Bitcoin. I completely get it, and I understand why it has caught the imagination of so many people. It makes perfect sense to me, but prove it. And a couple of years of extremely volatile but upward moving price isn't enough proof for me. And so, when I talked to Tony about this, and I asked Tony about Bitcoin because Bitcoin is the antithesis of everything he talks about. But I was curious to understand how he framed it in his own mind, and his answer was absolutely perfect. He said, "You know what? It's just not suitable for me," and that's the perfect way to describe it. And who knows if I'll live long enough to have it proven to me that Bitcoin will stand the kind of challenges that I know from history gold will stand. That's why I prefer gold to Bitcoin, but I think they're very similar instruments used by different people for similar reasons. Um, Bitcoin just isn't suitable for me, and so that prove it to me mentality is a big driver now of every decision I make because the risks of going back to zero at this point are too catastrophic to contemplate. And I have a very good friend, one of my co-founders at Real Vision, Remy Tito, who lived this. He lost basically everything in one of the crypto crashes in the Terra Luna token, very visibly, and was humbled in extraordinary ways in a very public space. And what he's had to do to go back and think about how we deal with it, and he handled it just, I mean, unbelievably well. The grace and the self-reflection and the ownership of what happened was extraordinary, and that is very difficult for a lot of people to do. But he's come back after going through that with a completely different appreciation, a completely different viewpoint looking forwards. And he'll acknowledge that it was ultimately a good thing that happened to him because whilst it was incredibly painful at the time, he is now more skeptical. He is now much more protective of capital. He's much more respectful of savings. And so, I think all these lessons is why I'm always at pains to say to people, just figure out what it is you're learning here and be open to learning that you can be an idiot and you can make dumb mistakes because we all do it. And I think skepticism is the kind of first line of defense in that.
I think it was during the global financial crisis. I remember in a previous interview you did, you talked about that experience. I think you were mostly positioned correctly, if I remember it. And then you kind of got a call by the head office to get flat and get out of everything. And I think that was a pretty influential point of time, for
It
your
was.
trading career. I'm just curious if
Yeah.
you could walk us through that and what that meant for you.
Yeah, it really was. And that's yeah, I haven't talked about this much, but it's by far one of the most difficult things emotionally and mentally I've had to deal with. And at the time, I was absolutely fuming. I mean, I was absolutely beside myself at the decision-making process and the fact that, I was sitting down in Australia and my book was positioned perfectly for the crisis, perfectly. I was short every financial stock you could think of. I was long precious metal stocks, which, after the initial drawdown, which was to be expected, performed extraordinarily well. And I just had a great book. And I was told down in Sydney by head office in New York, okay, you got to cut everything. And I desperately tried to speak to the guy making these decisions, and I knew him and we had a relationship. He was obviously so swamped with everything that was going on, it just couldn't happen. And the attitude was, no, we got no time for that. Just I want everybody flat. And I was really upset because I'd planned for this. I'd kind of mitigated what was happening, and I knew that the rest of the trading books were going to need the contribution that my book was going to make if we weren't to lose an absolute fortune. It wasn't cape and tights time, but I knew that this would contribute to helping the hole be a little shallower. And so it was the lack of willingness to hear my side of the conversation that upset me so much. And again, I've reflected on it a lot afterwards in the days and weeks and months following, and I came to understand why that decision was made. I never ever agree with it, and I like to think that if I ever found myself in that position, I would make time to learn what I learned from the other end of it, and I would listen to the conversation that people wanted to have with me and try and make a better informed decision. But time allowed me to completely understand in that fast-moving market with that amount of pressure why that decision was made, and I don't fault it at all. I don't like it, and I wished it would have been differently, would have gone differently, but I don't in any way fault that decision. I think it was arguably the right decision for that guy to make at that particular moment. But again, there's something to learn about being under that kind of pressure and trying to find space to not just do things that are instinctive and try and make decisions that you can look back on later and say, look, at least it was a considered decision. It wasn't a knee-jerk reaction. I thought about what I did, and if you still make that same decision, that's fine. And that was all I really wanted, was just let's have the conversation. If you listen to me and say, okay, I get it, but it doesn't move the needle for us globally, cut it, I'd have been fine with that. So yeah, I think that really speaks to this idea of no matter what's going on, trying to pick the lessons out of it in real time if you can, and if not, doing so after the event.
What was that like being positioned during that environment, on a trading desk? And I don't have any experience being on a trading desk. What did that look like? Was that something that you were positioned for a period of time, or is that kind of immediate after you saw a few bankruptcies? What did that look like on a trading desk?
Yeah, it was interesting. I went down to Australia in at the end of 2005, and when I got down there, I was talking to people. I'd been again, and a lot of this came from a lot of these kind of alt sites on the internet where there was some really fantastic information being disseminated by real estate brokers and mortgage brokers and all kinds of stuff. If you looked in the right places, and a lot of the stuff I was reading about was all about the condo situation in Miami, um, and how perilous it was becoming, and how all the subprime mortgage stuff was working. And there was some really amazing insider information, and by that I just mean people who were in the industry. And I don't think they could join the dots. They were just sharing anecdotes from their little parts of it that they either realized weren't right or they felt were genuinely scary. And so if you put enough of these things together, you had a kind of sense of what was going on. And I remember going to Australia and through '06 talking about this subprime thing, which to my colleagues in Australia, and quite rightly so, they were like, yeah, whatever, don't see how that's a problem for us. It doesn't mean anything to us. And so I'd seen this happening, and I didn't have the means by which to build something meaningful like Kyle did and like John Paulson did. I didn't, I was working on a trading book at an investment bank, but I was aware that this was a problem and it wasn't likely to go anywhere. And once you were looking at it and you saw what started to happen with Fannie and Freddie, and you saw these little signposts that once you saw a path ahead into a wood, suddenly these things all led down that same path. Whereas if you weren't looking down that path, they might just be bits of information here and there that you couldn't really pull into a coherent thread. And so I was able to run my book in a way that if that did become a global problem, particularly in the financial industry, Australia's banks were and remain a very idiosyncratic set of companies, and it's a very idiosyncratic way that market works around the banks, and their place in the Australian investment landscape is a rabbit hole that a lot of people would find fascinating if they went down. It's way too complicated to get into here, but it was clear that if the subprime thing became an issue in the US because of the offshore funding that was what Aussie banks relied upon, it would quickly become contagious into Australia. So being able to set your book up like that and then just kind of wait over time was infuriating and interesting and tough to defend and all these things. And you had to be very nimble with trying to do it because you had to try and offset any losses that you made as these things just kept going up. But as the subprime crisis started to unfold in the US, it's funny. I had a bunch of my Aussie mates who I used to work with they kind of quietly come over and they'd squat down by my desk and go, "Mate, do you fancy going for a beer at lunchtime? I want to talk to you about this subprime thing you were talking about." And it suddenly became something that you needed to understand. It wasn't about wanting to understand it. And there's always that line. There are people that want to understand something because they're curious about it, or they think it's a problem, or they think it's going to be the next big thing, whatever it is, but they want to understand it. And then it crosses over to a place where you need to understand. AI did this in the last year or so, right? It became something that a lot of people suddenly needed to understand, whereas the people that wanted to understand it were way ahead of us. And that's kind of how the whole thing worked. The trading desk came to this awareness, not just through me, but through reading of their own, and suddenly became something that people needed to know about. And so, being on a trading desk at that time, I definitely felt as though I I had an advantage personally, not over everybody else, but just that I was. It didn't come out the clear blue sky for me. I had seen this stuff approaching. Um, and I remember there was a big condo developer in Miami, MCI, was it MCI? I think it was MCI. I forget now. But a friend of mine in the US and I had been short this stock PA as we watched this whole thing go through in WCI, as we watched this whole thing evolve, and the thing ended up being a zero. It was a massive condo developer in Miami. And watching that happen made you realize, okay, this is big because this is not a company that goes to a zero. And so you had just these little signposts along the way that made it easier to navigate. And the fact that I'd been through 87 and I'd been through 2000 meant that I was cautious, and I was, as soon as my radar went up with what could go wrong, I didn't imagine the scope of it at the time. I just figured it could be a problem. That kind of protective part of me kicked in immediately. And so the last blow off fumes of the stock market rally in Australia where I didn't participate in at all. I just sat it out and I kept a neutral book, and I was always putting shorts out and covering them, putting shorts out and covering them. And so I missed out on the last puffs of nitrous oxide that Australian traders sucked in, but I got all that more back and more, and mentally didn't have to suddenly look around and go, wait, what the hell happened? Everything was great yesterday, and now I don't understand. So I didn't have that deer in headlights moment that a lot of people had everywhere in the world when this thing suddenly out of nowhere happened. But of course, there were plenty of people, the Carl Basses, the Paulsons of the world, the Mark Harts of the world, that saw this coming and was set up. Michael Burry, a great example, and was set up perfectly for it and capitalized on it incredibly well.
Being on a trading desk for 20 years across, whether it was Japan or Australia in different securities, I'm sure you sat across a table or with some really, really good traders and some that weren't as good. Yeah. And I'm curious if were there any similarities between the successful traders, either their personalities, their temperament, their discipline?
That's a great question.
When you think about it.
Yeah, it's a great question. And I've been privileged to work with some extraordinary guys. And I think I think all the really good traders, the thing that struck me and the thing that kind of runs through them all is this supernatural sense of being able to feel things, of being able to just know when something was right or wrong. They could, people talk, we used to talk about people reading the tape. And there are definitely people who can see this, like Russell Crowe in A Beautiful Mind, and all this stuff's going around, but they can pick the patterns out of it. And they all had supreme self-confidence. They were all absolutely ready and willing to back their gut instincts, but they were all ready to be wrong the second they put the trade on. The second, they never got wedded to ideas. Some of them would try to boss the market around, and move the market to where they wanted it to go. And back in London in the early days of that Japanese warrant market and convertible market, that was possible because all the deals were done on the phone. We had a phone in each ear all day long, verbally trading with our counterparties at the other firms around the city. And through sheer force of personality, you know, it was able for certain people, and I wasn't one of them, to move those markets to their will just by their reputation, their confidence. When a guy lifts you in something and just asks you for your next price and lifts you again and lifts you again, sheer force of personality, the guy on the other phone goes, he must know something. This guy's too good. He's too experienced. He's too old. He's too forceful. I'm not going against him. And so they would cover. And so you saw the market getting pushed around by these guys to a degree. And it would always reach a point where natural sellers would come in and it would self-regulate again. But there were definitely people who were able, through sheer force of personality, to push markets around. And I don't think that can happen so much anymore. I think the electronic nature of everything takes that out, which is a good and a bad thing. Um, but I think the one thing that the thread that ran through all these guys was this willingness to be wrong, and an almost pathological desire to find ways they could be wrong. It's like the price is going up, yeah, but, and it's up again today, yeah, but. So yeah, it's the what was it, that Justice Potter Stewart quote about pornography? I can't describe pornography, but I know it when I see it, and I very much feel like that with good traders. When you're around them and you just watch how they operate and you feel the way they do this, it's very tough to break it down into a set of rules. Bob Farrell did a great job of that at Merrill Lynch with his 10 rules for traders, which are superb. But there's that X factor, there's that unknown quantity that people have, which is innate, and it's a feeling, and it's something that you can't teach. You either have it or you don't, I think, and you can get better through experience over the years. But the really gifted traders have something that I genuinely, in my experience, I don't think can be taught.
What was your process if you had one, it was a question that just came in as a good one. Yeah. How would you separate out what is luck versus skill or unlucky versus poor skill?
Yeah, that's the question you have to ask yourself, right? It's a fantastic question to ask because I think we're all predisposed to believing that good results are skill and bad results are bad luck. I think that's the
Mm.
gut reaction to most things because most of us put so much time and effort into deciding whether to buy or sell something. You go through this whole idea of, I've got this great idea, and it starts as an idea, and you do the research, and you look at the numbers, and you do the comps, and this is if you're investing rather than trading. If you're trading, you're sometimes just going with the momentum. But you do all this work, and you come up with a reason why you don't know how this is going to go, but you feel confident that this is a very plausible path forward, and it could lead to this kind of return, and I get my risk management right, bang, and you're in. And as soon as you put that much work in and you've taken on a position like that, um, it's tough to be wrong because you feel like I put all that work in. How could I have got it wrong? I don't want to look foolish. And so the most common thing is to say I'm right, but I'm just early, and being unwilling to accept that the reasons you've put the trade on or invest in a particular company they might all still be good, but something else might have happened that invalidates some of them. There might have been a press release from the company. There might have been a press release from a competitor. There might have been a new government policy enacted. It's absolutely possible to get everything right and lose money. It's absolutely possible. And as soon as you recognize that and give up this idea of, well, this is just bad luck or this is unfair, it makes you much better at understanding that, okay, this is not going the way I wanted it to go. Why? Let me find out why. And if it invalidates my investment thesis, I'm out. I don't care if it's 24 hours after I put this thing on, after 6 months of work. If something material has changed and it means the outcomes like change, I have to be out because it no longer works. Stan Druckenmiller and Soros and a lot of these guys talk about investing a little bit first, so it makes you follow the stock and you do the work, and I totally get that. But trying to decide what's good luck and what isn't, and what's bad luck and what isn't, honestly, to me, it requires nothing more than self-effacement and honesty about what happened, and recognizing that if you make money, it might be in spite of you rather than because of you. And if you lose money, the same thing could be true. But what were the reasons for anything? When you should have a post-mortem when you make money is not just when you lose money. Why did I make money? Which is what I was talking about earlier in this conversation. Was it because I got it right or did I get lucky? And if you're lucky, great. But what did I miss? And Tony and I have talked about this a lot over the years. What did I miss? What did I not see back then that I could have known? And you ask those questions whether you got it right or wrong, because there will always be something. There will always be something that you could have seen back then that you didn't now. Now, with the benefit of hindsight, you get the opportunity to go back and you get the opportunity to revisit and you get the opportunity to reassess these things. And maybe the answers you come up with to that reassessment change your framework going forward. Maybe they don't. Doesn't matter either way. You shouldn't be wedded to the outcome, but going through the process and going through the exercise of that is an incredibly important discipline to have.
Yeah, I find the whole investment maturation part just to be so fascinating. It's like, 6D chess, a little bit of it, because you're not only
Yeah,
getting these wins and losses and trying to figure out whether it's luck or skill, but you yourself are evolving and your risk tolerances are changing. And the ones that usually mess me up the most are the ones I made money on in the past that I know I would never invest in that same exact setup today. And that was a
there you
big own
go.
I had, and I'm just like, well, am I evolving in good ways or bad ways? It's like it's that question that you're always asking yourself, but it's what makes investing so unique and fun.
Yeah,
Um,
yeah, so true.
I think it was in a conversation you had with Matt Ziegler, to give him a hat tip. Enjoyed his interview with you as well. I think you mentioned a quote from a movie, Bridge of Spies. I think it went something like, "Are you worried? Would it help?"
Yeah,
And I thought your explanation of that was really spot on. Could you explain that?
yeah. Well, that was a big shout out to my dad. He loves this film, and he'd often talk about it. And this idea of the guy who's he's in prison for being a spy, a double agent. Tom Hanks is sent over as the lawyer from America to try and get him out. And the walls are closing in around this poor guy, and obviously he's in Soviet Russia, and it's never looking good if you're in a prison cell in Soviet Russia. And Tom Hanks keeps saying to him, why aren't you worried? And Mark Rylance, who plays the prisoner, every time he says, just would it help? And I think it's such a great thing to bear in mind. Worrying doesn't help. The outcome is the outcome, and there are things you can do before the event to try and mitigate the bad outcome. There are things you can do in the moment of things going wrong to try and cauterize the wound. And there are things you can do afterwards that involves honest self-reflection and an attempt to understand, okay, why did I get hurt? And this comes back to what Tony talks about what did I not see? If you get to the post-mortem reflection stage, ask yourself, what could I have done in the moment that I didn't do? How could I have handled that better? And then you get back to how could I have set myself up better before that in terms of perhaps mitigating some of the downside that I suffered. There are always these lessons, but worrying, it doesn't help. It doesn't change the situation you're having to face. And if you're worried, it probably means that your position sizing was too big. It probably means you had too much invested in this, whether capital or emotional energy or self-worth or whatever it may be. If you're worried about this, and this is, when I say The Godfather, this is the life we chose. if you've chosen this life and you're worried, then something isn't right, because you shouldn't be worried. You should be vigilant, and you should be ready to change your mind, and you should be ready to take action, but you shouldn't be worried. That's something that suggests everything's out of your control. And whilst obviously the ultimate outcome is, there are things you can do that mean you don't worry. You're not nervous. And sometimes it's as simple as reducing your position size so that if you're wrong, it can't hurt you. And that's, again, that's just one of the things you learn, is that all these things seem great. Everything you invest in seems like a great idea. You wouldn't do it. Um, but allowing yourself to not get greedy and allowing yourself to leg into a position over time, and being comfortable that, I might be paying more for these to get in, but at least the trend's confirmed, and at least, there's momentum behind it. So, this idea of worry as an investor, I think it's the wrong thing to feel. Vigilant is a much better way to feel than worried.
What This is a very open-ended question because I don't want to lead you anywhere, but I'd love to hear what you're thinking about lately. What's top of mind for you currently?
Ah, boy, oh boy. Top of mind at the moment is finding the space to think about all the things that are top of mind at the moment. I mean, it's an extraordinary environment we find ourselves in. I was in California last week speaking to a group out there, and the first session I did, the beginning of the day, was a session on the U.S. election and politics. And of course, trying to have that conversation in the US is not easy these days. It's certainly not easy to do in a solidly blue state right now, because there are certain realities confronting the Democrats now, like the chance that Trump could win, that are impossible for them to comprehend. And so having that conversation with them, and I was able to have it because I'm not a Republican or a Democrat. I'm not an American. I'm an Englishman, which is worse to many Americans, but what can you do? But we managed to find a space where I could talk about how I saw things, and I've spoken about this a couple of times post the event, because it was really an interesting hour, and they were a fantastic crowd. They were very respectful, and we spent 58 minutes talking about my talking about not just how I see the US, but also kind of reassuring them, because if you're in the US, you don't get served overseas political news as much as you do overseas getting American news, because it's, Australia is not important to the US, but the US is important to Australia. So that information exchange generally tends to go in one direction. So, I spent a lot of time assuring them they weren't alone. And this kind of wild stuff in the political arena is happening in every Western liberal democracy around the world, from Australia to New Zealand to Canada to the UK, France, Germany, all right the way through Europe, you name it. So that you're not alone. But the point I was making to them was, whoever wins, they face the same problems. They're probably going to have to do the same things, which is increase the debt, bigger deficits, spend money they don't have to try and keep this whole thing together. And having spent 58 minutes making it abundantly clear and undeniable that I really did not have a dog in this hunt. I wasn't for either side. I decried politicians of all colors around the world. I think the political class we have now is abject. I said, well, let me try this. Let's try an experiment. I said, if you took me into a voting booth now here in the US, gave me the ability to vote, closed the curtain behind me, put a gun to my head and said, right, put a cross in one of those boxes, I'd vote for Trump. And if you've ever heard air leave a room, it's quite deafening. And the whole mood in the room changed. And one lady booed me, actually physically booed me. And I said, well, look, let's just hang on a second here. I said, let's just think about what just happened. You all know, because I've made it very clear, that I can't vote. I cannot affect the outcome in this election. I'm not going to vote. So whatever I say carries no weight whatsoever. And you know that my disdain for Trump and Harris and the Republicans and the Democrats and the Conservatives and the Labour Party and everyone else is unanimous across the board. I think they're all awful. And yet, when I said that, you threw out everything we've talked about for the last hour. You discounted everything I said, and it became a visceral reaction because I said one name over another. And so you need to think about that, because understanding where that comes from is a big part of the problems that face all of us, because it shouldn't be about red versus blue. It shouldn't be about candidate versus candidate. It should be about who's the best person to have in for the country. And you can have your ideas on who the best person is, but that should ultimately revolve around policies. So what are the policies of both candidates? So the thing finished, and as I said to everybody, look, did you all feel the atmosphere in the room change? There was like some nervous laughter, and they got it. And the feedback post the event was terrific in terms of people saying, that actually, thank you. That really made me think the way that went down, and I felt it in the room, but I've reflected on it, and something's clearly wrong. But I went afterwards and I found the lady who booed me, and we spent 10 minutes chatting, and she was perfectly nice. There was a real intention in what she had to say to me, which came from either a combination of trying to understand how I could possibly think differently to her, and part of it was trying to convince me to think otherwise. And I think that's where we are. So when I look at the things that we have to think about now, unfortunately, this political divide is absolutely top of my mind, because from that political divide comes the response to Ukraine and Russia, comes the response to Israel and Hamas, comes the response to deficits, all the responses to all these things are now wrapped up so much in the political process, because in order to win this existential election, we have to get more people to vote for us. And it's not about the issues. It's not about what we can or can't deliver anymore. It's what do we have to promise to get those votes? We'll figure the rest out afterwards, but we have to win this, because if we don't, they'll win. And if they win, it's the end of democracy, which I just don't think is true. And I don't think a lot of the people that say this stuff think it's true, but it's a powerful idea to put in people's head to galvanize support on both sides. And obviously that's why you're seeing both sides say, vote now, this is the end of democracy as we know it. So if you start from that position in trying to figure out what the things are you need to worry about, you realize that the things that are going to dramatically affect you potentially are decisions that are going to be made post November in the US, and that will trickle down. And in fact, on October the 30th in the UK, when the Chancellor unveils her first budget, there are decisions that are going to be made that are purely political in nature. They're not necessarily about solving the problems. They are about, because if you look at the problem that the UK is supposedly in, the solution is probably 50% cutting spending. There has to be a spending cut in that solution. It can't all be hiking taxes on the wealthy, right? Whatever the wealthy means. And that definition in the UK is shifting by the day. Now, suddenly, if you have investments, you're not a working person anymore. It doesn't matter that you work your whole life and you don't have enough investments to sustain you in retirement. But if you have investments, potentially you're not a working person. So it's okay to raise the taxes on people that have investments. So we don't know what's going to happen, but these are purely political driven decisions now. It's how do we, not what's the right way to get out of this hole, but how do we navigate this while retaining as much political capital as we can? And that, for us as investors, changes so many levels of the calculus we have to put into any investment decision, because suddenly these aren't rational decisions that are getting made. They are political decisions getting made, and that involves understanding human nature and understanding the political animal, which is in some ways simple because they're motivated by power, and in some ways difficult because we can't quite understand what they will do to either get or maintain that power. So I think we've all got a very difficult period ahead of us, because this comes obviously at a time when inflation is just sitting there waiting to upend every decision they make, and waiting to upend our purchasing power and erode the value of our savings on real terms. And it's going to take some kind of perfect navigation of this sort of problems for this to not have severely painful points along the way. Ultimately it will end okay. We'll get through this like we have before, but I think the next little period is going to be unlike a period we've seen for a long, long time now. 2008 was probably a suggestion of what we're going to have to be dealing with in terms of the weakness of the financial system, the monetization of debts. Before, when you had an $800 billion Fed balance sheet, the monetization of debts wasn't a big issue. When you start from 7+ trillion, it becomes a much bigger issue much quickly, but they don't have many options available to them apart from that. So, it's very difficult to pick one thing out, but sadly for me, the politics is so toxic and the constraints around whoever wins are so tight that the decisions that get made are going to be difficult for us to mitigate in advance and possibly very problematic for the investing class, who are, I suspect, going to be demonized, and made to pay their fair share, whatever that may be.
So how do you best express your views on where the world is going in your portfolio?
Yeah, I watched War Games the other day for the first time since like 1982. And I'd forgotten the movie, and it was just one of those jet lagged 3 o'clock in the morning things, looking for Netflix or someone to fall asleep to, and on it came. And for anyone that's seen it, you'll remember this. If you haven't seen it, I'll give you a quick synopsis. It's about a young kid, Matthew Broderick, who accidentally hacks into the NORAD defense system and sets off an exercise that makes it look as though there's a nuclear war happening and the Russians are launching ballistic missiles at the US, and chaos ensues for the next hour and a half. When they realize that the computer's gone rogue, they find out the only way to shut it down is to make it play tic-tac-toe, which is a game where if you're smart, there's never a winner. And so the computer plays tic-tac-toe, and in the end, it essentially comes to a stop and says, I realize that the only way to win is not to play the game. And that's very much how I feel at the moment. If you want to win, you shouldn't be playing the game. And by the game, I don't mean you shouldn't be investing. By the game, I mean you've got to be very careful about investing in momentum stuff. You've got to be very careful about investing in hot stocks and stock tips and ideas that you don't have a fundamental understanding of. And finding a way, for me, it's for 20 years I've been accumulating precious metals, because this was always kind of the end game that I saw happening, was going to be monetization and debasement of the currency, because that felt like the only way out for me. And it's not, my interest in gold has never been price related. It's always been that protection of purchasing power. And so I think that is going to play an important part. And for the people that prefer Bitcoin, I think Bitcoin will do a similar job. I just don't know how that goes. I pretty much know how gold will be treated. Is there a chance it could get confiscated? Absolutely. It's happened before. But knowing that it's happened before, you can put it in different jurisdictions and you can do things with it that will at least give you a chance to do something before it gets confiscated. What happens with Bitcoin, I have no idea. And so to me, as a store of value, Bitcoin, there are questions that I can't answer, which makes it, again, not suitable for me. I think as flawed as they are, short-term treasuries, if you can earn 4 to 5% in a short end with very little risk, essentially zero risk in those, then it's a sensible return. It might not keep up with inflation, but it's a good thing to be paid to wait. And then I think I go back to this idea that I've talked about before, which is investing in businesses instead of stocks. Because everybody talks about, what stock are you buying? What's the right stock to buy here? The question used to be, what business should we own? What should I be the part owner of in order to navigate this next phase? And a lot of that, I think, is going to come from private markets, not the private credit, private debt stuff that people talk about, private equity, but finding companies that aren't listed. And so they don't get revalued on a minute-to-minute basis. And you don't have the psychological trauma of seeing a company fall 20% in a day for reasons that you have no understanding of. But you find businesses that are worthy of you lending capital to for a fair return, or taking an equity stake in, as I said, that aren't listed. This goes back to what is investing. And investing, it wasn't the stock market. The two have become conflated. The idea of investing tends to begin and end with the stock market and the bond market for people, whereas it used to be private enterprise. The investing started with providing capital for people to build businesses or undertake enterprise that you felt would offer a return. And so, I look at it very much that way. I've got some private investments in companies run by people that I know, and I understand the business, and I understand the need for capital and my chance of getting it paid back. I completely understand that. Um, I own a significant amount of precious metals, which, thanks to the price, is getting bigger. But I don't lose any sleep over it. And if it fell 20% tomorrow, I wouldn't care. That's not why I own it. I own some short-term treasuries. I own a lot of cash, and I know the cash is being debased, but the optionality that cash gives me is worth it to me. It's worth it to me. And this is a crucial thing for people to understand. Someone could listen to what I have to say there and go, well, that's ridiculous. And it might well be to someone. And I completely get that. If you've made money, being long GameStop and, being long Bitcoin and being long all these things, what I've just said is going to make no sense to you whatsoever, nor should it. Because if what I'm saying makes sense, then what the hell were you doing buying GameStop and Bitcoin? And that's one of the problems with uh, financial media is the ability that people have to make suggestions to people they've never met and will never meet, and have no idea what their goals are, have no idea what their risk tolerance is. So, what's appropriate for me could literally not be appropriate for another single person on the planet. It just may not fit all the criteria that they want. And so nobody should listen to me. It's okay to understand what I've done, but when you like I do, you start with the recommendation that nothing is a financial advice, and it isn't. This is one person's opinion. This is one person's attempt to satisfactorily navigate the situation that they feel they're in a way that gives them the best outcome they think they're capable of generating for them, their partner, their kids, whoever it may be. It has no bearing upon what anyone else is trying to do, other than, okay, this guy seems to have similar problems to me, or he seems to try to mitigate similar problems to me. Let's take a note of what he said, and then let me think how that would work for me. Let me think. This isn't the solution just because we think the same, but let me look at that and fit it into my life and fit it into my objectives. And does it make sense? And if it does, why does it make sense? And what solutions is it giving me? All these questions, these secondary and tertiary questions, we very rarely ask because we're so fixated on that three-letter acronym that's going to provide the key to these massive gains when the next run comes. And I don't really know what the stock does, but this is why things like what was it, Long Island Iced Tea changed its name to Long Island Blockchain or whatever it was, and the stock went through the roof. This is exactly why people get caught up in this stuff. So it's important to listen to what people think, and it's important to be willing to ignore every single thing they say because it's not suitable for you. And it's also appropriate to give ideas the time you think they need in order to see if they're suitable for you.
As a more macro-centered investor, you're sort of riding these themes or trends that can last, 10, 20, 30 years. They don't
Yeah.
start and stop easily. And, I'm curious how you stay grounded in your conviction, but also nimble. I think it's easy for some folks to be like, oh, he's just a doom and gloomer,
Yeah,
or
I
this,
get
that,
that
and the
all the
other
time.
thing. And I'm wondering how you kind of stay present and self-aware of kind of where you are, or do you bother, or, how do you think about that?
Yeah, I get that all the time, and I absolutely understand where it comes from. And whenever I have a conversation like this, or in my own work, or wherever it may be, I'm fully aware that there's no shortage of people telling you why everything's great and why things should go up. No shortage. Turn on any media outlet you want, and they will give you the optimistic viewpoint 90% of the time. And there'll be a little space here and there for what could go wrong. But 90% of the time, here's the upside. Here's why everything's great. And I get it. I know how those business models work. I know what they're trying to achieve. And the way to achieve their ends is absolutely to do that, is to tell you 10 things to buy and one thing to hold. I get it. So for me, if I did that, if I told you all the things that I think you should buy, I'm just adding to that noise. And I think that what's missing is an honest assessment of the risks. I just don't think the risks are discussed enough because they could put people off buying shares. And if people are put off buying shares, they won't watch CNBC anymore, and their advertising revenue will go down, or whatever it may be. So, my friends will tell you I'm absolutely not a doom and gloomer. I'm believe it or not, a carefree and happy man. I love life, but I understand that there are risks, and I understand that by talking about them, if 1,000 people think I'm a doom and gloomer, and one guy goes, actually, I hadn't thought of it like that. I should probably sit down and think about the risks. I'm very happy. I'm very happy with that. That ratio is fine because ultimately, I think the best service I can be of to people is not to offer them some more stock tips, is not to tell them what I think suits me to buy, but to caution them about the risks and to perhaps try and do so in a way that makes them much more prone to asking how and why instead of what. So I think once you start asking the how and the why questions, they will take you a lot further than what. And people want to be told what. Um, and the what is a very lazy thing to require because once you get it, you feel like that's the end of it. Whereas the how and the why, they're much more beginnings of a journey to a deeper understanding, a deeper appreciation of risk and opportunities and whatever it may be. But I feel like that is a far more valuable contribution that I personally can make, given what I have to supposedly offer the world, than saying, hey, buy Apple or whatever it may be.
No, I agree. I think it's something with age too. It's like I enjoy more and
Yeah,
more.
I've got
I
plenty of
enjoy
that too.
more and more speaking to people that aren't the same as me or invest differently than me. That's who I learn from because they're usually, especially as an investor, when you look at somebody that invests kind of the opposite side of the spectrum as you and they're still making money, whatever asset
Right.
class or whatever it is, there's usually something you can learn from them. Not everything,
Absolutely right.
and that's where you can produce some alpha in the way you think about things, in the portfolio or even how you think. So
Yeah,
I
couldn't agree
agree.
more. Couldn't agree more.
You've been writing your letter now for I think 14 years. Is that all right?
Yeah, I think this is 15 this year, I think. Yeah,
Yeah,
15. Okay.
and I know it goes beyond a letter. I mean, you build really a community, really, and you know, the term community is something that's near and dear to my heart with Microcap Club. I mean, we're basically a community of microcap stock pickers from around the world, and I'm just curious as you build out your community over the last 14 years. And I think I heard you say previously in an interview, it's not about making more money from this or that. And it's the same thing for microcap club. I mean, there's only so many microcap investors out there. For me, it's mainly the relationships, the people you get to meet through you being out there vocal, and things like that. I'm just curious, like what are the KPIs that make you smile when you think about building out your community over the last 14 years?
Easy, the people in and around that community, and the people that I've been fortunate enough to connect with and interview and pick their brains and share their wisdom. I mean, it's an extraordinary thing what's happened in the last over that period of 15 years. I've seen the change that social media, for example, has wrought in terms of being able to get to people, being able to get a message to someone who has written something or said something you're interested in, and being able to engage in dialogue with them. And I've been incredibly fortunate that so many people have agreed to sit down for an interview or invite me to their homes to spend a day talking to them about the world. When you know the exchange for that is them giving up their most precious asset, which is time. The fact that people give time to allow me to pick their brains and then share that with other people in the hopes that the lessons you can learn from these from my guests are applicable in just about everybody's life in some way, shape, or form, and some of them will apply more directly than others. And this is why I've tried to interview not just finance people, but business people and sports people and um, people from different walks of life who amazingly face the same challenges we do and are trying to solve the same problems we are internally and performance and how you deal with success and failure. And if you talk to a trader and you talk to an athlete, if I set out a list of questions to ask you and I didn't tell you which one was the trader and which one was the athlete, you would not know. If I wrote the questions the right way, they would answer them in the exact same way because the mindset is so similar, and this ability to kind of, forget your last loss, forget your last trade, focus on the future, one trade at a time, one game at a time. All these things that we feel are so unique to us in our experience are shared by people all around the world. And that sense of I'm not alone in this, and that sense that not only there are other people going through these things the same as me and asking themselves the same questions, but I have access to their answers. And maybe if I listen to people talk about problems that I haven't faced yet, the way they dealt with them is going to stick in my head. And when I do face those problems, I've got someone here who I know experienced that. And how did they deal with it? Is that suitable? Is that the right way for me to deal with it? Or do I need to tweak it slightly? Or maybe they can stop you making a dumb decision. This sharing of experiences and sharing of the wisdom that comes from experience, and really only comes from experience, most of it painful, um, to me is invaluable. That's where I've learned the most. That's where I've extracted by far the most value. It's not been from investments in the stock market. It's been from investments in time spent talking to people, and more importantly, time spent listening to people. Um, you'd be amazed what you take away from listening to these conversations. You're amazed what lodges somewhere deep in the back of your head, and you don't think about it for 2 years, and then something happens, and these words just pop in your head of someone you heard talking about on a podcast 2 years ago. It's like, wow, yeah, I remember this guy talking about that. And so this unconscious ability we have of taking in information that we don't even know is important to us in the moment, but we feel that it's going to be worth remembering at some point in the future, um, is incredible. I mean, I have a whole load of 80 song lyrics in there somewhere, and I'm happy to get rid of those if I need more space. But the wisdom and the lessons of people like Tony and people like Sir Stephen Wilkinson and so many other people, I'm talking about those two guys because I've spoken to them recently. So many others have shared with me, and I've then been able to share with my subscribers, is by far the greatest thing I could do for anybody that subscribes to me, as opposed to offering them my thoughts. But this collective pool, this hive mind of shared experiences is phenomenally valuable to people, and it's just a huge joy to get the opportunity to do that.
You've been interviewing people for a long time, and you're so good at it. It's like one of the many areas I'm jealous with you about how you do things. You just have a natural cadence to your voice. You're easy to talk to, and I'm just curious, like, how do you prepare for interviewing someone? Is there kind of a normal kind of checklist of things that you do, or and how's that evolved over the years?
It's definitely evolved a lot over the years, and the way it's evolved has actually been interesting to me. Because if you'd have asked me how I thought it might evolve, this is completely the opposite of what I would have thought. What I found is, as time has gone on, I like to do less preparation for conversations, because if you and I were going to arrange to meet for dinner, California, we're going to go for a bite to eat. You're not going to sit there prepping questions for that conversation. I'm not going to do that. We're going to sit down to eat, and I guarantee you we won't run out of things to talk about for an hour, 2 hours, whatever it may be. And maybe we go for a drink afterwards because the conversation's so good. It doesn't matter. There's something in having a conversation with someone as opposed to an interview, and that my big revelation was that. And I'm always very, very conscious of not only calling what I do, but thinking about them as conversations and not interviews. Because I think an interview, and I've found this, as I've gone through this journey, an interview dynamic, whereas I've got a list of questions and you're here to answer them, taking it down that road means several things happen along the way. The first is I've got a list of questions, and once I've got them, I want to get through them. Whether I know that consciously or not, if they're there, I'm going to try and work my way through them all. You know that I've got a load more questions to ask. So as soon as I ask the first question, you truncate your answer because you think he's got another question to ask. I don't want to be talking too long. We'll let him get his next question in. I'm not really listening to you because I'm thinking, all right, I've asked him this one. How do I segue from this to my next question without it being a clunking gear change? So as soon as you give me a chance to go in, I'm probably going to go, oh, funny you mentioned that. I wanted to ask you about that. And I've left who knows what, where you were going with that. I've got no idea where you were going, but it could have been absolute gold. So this idea of conversation versus interview has been the most important thing to me. And so for me, in terms of preparation, obviously I know who I'm talking to. I know their broad backstory. I know some things that I want to talk to them about, some subjects that I'm curious about. That there may have been a piece that I read that drew me to ask them if we could have a conversation. So I want to talk about that piece. And um, but I found it so important to leave as much room as you can in any of these conversations for it to go anywhere and for you to completely tear up the thing you wanted to talk about because you've just been taken to something that's far more interesting and you hadn't thought about and you're genuinely curious. So if you can maintain that curiosity, that genuine curiosity about what someone else is thinking and resist the temptation that a lot of people have to talk rather than listen, to prove how smart they are, and not let the guests just be as expansive as they possibly want. Because the longer you let someone talk, um, the more expansive they tend to get because we're constantly thinking as we talk. And I've seen people in interviews talk about stuff, and then you see it just goes to another place, and you can see them thinking and talking in real time. You can see that they go, "Man, I've never really thought about this," and so you end up with conversations with people that no one else has had because you've allowed them the space to develop their own thoughts. And so none of that to me was anything I ever sat down and thought, okay, this is what I should do. It's pure realization along the way that I'm not interested in talking. I'm much more interested in listening. Hard to believe when you've listened to the last hour of this, I realize that. But I'm much more interested in listening. And if you listen for long enough, the next question, I guarantee you, will present itself to you because these are all supremely smart people with interesting points of view and interesting experiences. And so if you run out of questions, it's time to end the conversation. It's perfectly natural. Like we do when you're sitting in a restaurant, you go, you know what, it's probably time I should be getting home. You don't do that because any other reason than either you're exhausted, which means the conversation is not engaging anymore, or you've got a babysitter or whatever it may be. But otherwise, we've all said it before. God, I could sit and talk to you for hours because you feel like that. And sometimes time intrudes and constraints arise. But for the most part, if you haven't got another question to ask, kill it. If you've been talking for 20 minutes or so Stephen and I sat talking for 6 hours until I looked outside and realized it was dark. I had no idea what the time was. And it turned out we've been talking for 6 hours. Um, and that's the beauty of a conversation is to be able to lose yourself in it, to be able to take as much as you give and hopefully take more than you give because that's lucky if you manage to do that. I certainly feel that way in every conversation that I have. I take so much more than I give in these things, and by design, because I'm there to try and soak up as much as I can. What an incredible thing to be able to do, to sit and listen to people share their ideas and experiences with you. It's extraordinary.
You've done a lot of things, you've accomplished a lot of things, and you're doing a lot of things. I'm curious, what other mountains do you want to climb that you haven't started yet?
Do you know what? I don't think of a series of mountains. I think for me, it's this whole journey is just one big mountain, and there are base camps along the way. And I don't know that, the summit's in the clouds. I have no idea where the summit is. I just know that I'm not out of breath yet, and I'm still climbing up that mountain. I'm still enjoying that ride. I mean, the air is getting thinner, and that's an age thing. The traveling I've been doing um, is definitely making the oxygen feel a little thinner up here. So, that's something that I need to think about how I continue to do, but maybe adjust my travel schedule so that, it doesn't take such a physical toll on me. Um, but there are, as you climb up the mountain, you meet so many other climbers on the way, and they take you in different directions and they, show you a little way up here and they show you a way over here. And I think for me, it's just being open to the fact that, at some point, I'm either going to reach the summit, look out and go, all right, I've made it here, or I'm going to get to one of the base camps somewhere and I'm going to sit down and go, you know what? Yeah, it's enough. It's enough now. I've done what I wanted to do. I'm happy with what I've done. And I don't feel the drive to do it anymore the way I still do. And I still feel that drive. I still love what I do. I love every conversation I have, and I'm learning so much. So, why would I try and climb a different mountain? I'm loving the journey up this one.
I think that's a great place to leave it. Thanks for joining us, spending extra time
Ian,
with
it's been
us.
a great pleasure. I'm very grateful. Thanks for having me.
Where can people find you?
On a plane most of the time, but nice and simply, I've got one website, grant-williams.com, and everything is on there. You'll find it all if you're curious. Take a look and email me. There's a way to get hold of me on the site, and I'll happily answer any questions people have.
Excellent. Thanks again for your time.
My friend, pleasure. Thank you.